Now, despite predictions by some that the housing market may be bottoming, a lot more Americans are at risk of losing their homes. According to Realty Track, foreclosure filings topped 300,000 for a third straight month in May.
Over the last 3 months, we've had over 1 million foreclosure filings. To put that in context, the first year we did our report, 2005, the entire year had about 830,000 filings. So the numbers are just mind-boggling no matter how you add them up.
A Realty Track says foreclosures may hit a record by the end of June. An economist with the Mortgage Banker Association says the foreclosure bucket is filling faster than it's emptying. Now, that is an unfortunate story. Maybe some green shoots, though, in the offing here. The fact that Americans spent more money in May is all the more impressive, seeing how much wealth we have lost as a nation in the first quarter of this year. Will falling wealth and rising mortgage rates snuff out tentative signs the economy is bottoming? Bloomberg's Kathleen Hayes is here with more on this very interesting story. We actually got headlines about the
It's a Federal Reserve's flow of funds report. It comes out every quarter, and, you know, it's one of those ones that has so much in it. It doesn't get a lot of attention, but the headlines, I think, really eye-catching today. And again, talking about the Federal Reserve's flow of funds numbers, U.S. household wealth fell by $1.3 trillion in the first quarter of the year. The Fed says this reflects falling home prices, falling stock values, and in fact noting that this drop in U.S. household wealth extends the record slide we saw in the fourth quarter when it fell by nearly $5 trillion. This is one big reason why people are saving so much more money. Wealth we thought we had in our homes and stocks has disappeared, and some economists say this is one of these long-term trends that will perhaps keep the economy, even when it starts growing again, on a flatter growth trajectory. Because people lost money, they got to make it up now.
Losing money certainly sounds to me like a threat to consumer spending, which is obviously key for growth here.
So, good news. In May, retail sales actually moved higher. That's one reason why we watch this retail sales report so closely, up 0.5% in May. April's number revised a bit higher. You know, interesting that one of the things that pushed this higher was auto sales. They had been so depressed. They've come up of those depressed levels. We saw building materials sale rise. But one thing that isn't so impressive is gasoline station sales. They're up nearly 4%, but think about it. The reason we're spending more on gas is because it costs more. Take out gasoline station sales, then retail sales only rose 0.2%. And Josh Shapiro at MFR Inc. says the fact that these non-gasoline sales were unchanged in April and May in spite of the government's tax cut isn't a good showing. He says it's clear the fiscal boost is being used to either help fill the hole left by a decimated labor market and or to help households whittle down their debt. Now, people could also be cautious because the labor market is still so weak. Jobless claims, however, look, coming down. This is a good sign. 602,000 in the latest week is the lowest since January. But the other side of the coin is continuing claims. People who can't get jobs, so they have to keep getting unemployment checks. That number now over 6.8 million. And, you know, unemployment checks aren't as big as paychecks, Matt. Less, you know, less money in your pocket, less spending. That's another threat.
All right, one more big threat here, and that's interest rates, right? I mean, could cause serious problems going forward.
Not the short end. The Fed's keeping short-term rates low. They may not raise them for some time, but it's long-term rates. The market controls those. The 10-year note yield has surged, and it's not just the level, it's the speed with which it's gotten there, and that's helping to push up mortgage rates. Freddie Mac reported its 30-year fixed rate jumping to 5.59% from 5.29%, and if you put that in perspective, Matt, you can see that the Freddie Mac mortgage rate has really moved up very quickly, and this is an issue. And of course, you know, when you look at some of the factors, we were just looking for retail sales already, according to Josh Shapiro, not too impressive. You wonder if that higher mortgage rate could affect that as well.
All right, Kathleen, always a pleasure. Thanks very much for joining.